Welcome back, ladies and gentlemen. Thank you all for joining me today. We're going to be taking a look at one of my investments into a business that I did hold back from 2020 into 2021, and then I sold it off. And we're going to go through all of that, why, and here. Now, if you want to see what my portfolio looks like in total, my goal is to every month, maybe twice a month, depends, but at least once a month, towards the end of each month, I'm going to show my portfolio, show how we did in the month. Obviously, we're long-term investors here. We're trying to invest into businesses, but I know that some people really like seeing that and seeing what you're doing, and I like having it for the transparency's sake too. So if you're interested in that, if that's what you're interested in, make sure to click the card up above. I'll make sure to link it. I'll try to link it. I don't know which side it's on looking at the camera, but I'll make sure to link it. But if you're interested in that, make sure to click on it. And with that being said, let's dive right into Revolve and why we're buying. Now, Revolve Group or Revolve Clothing, however you want to pronounce it, it's called Revolve Group Inc., but what they're going to be focusing on is what comes from their 10K. Now, Revolve describes himself as the next generation fashion retailer for millennial and Gen Z consumers. As a trusted premium lifestyle brand and go-to online source for discovery and inspiration, we deliver an engaging customer experience from a vast yet curated offering of apparel, footwear, accessories, and beauty styles. Our dynamic platform connects a deeply engaged community of millions of consumers, thousands of global influencers, and hundreds of emerging and established and owned brands. Through more than 18 years of continued investment in tech, data analytics, and innovative marketing and merchandising strategies, we built a platform and brand that we believe is connecting with the new next generation of consumers and is redefining fashion retail for the 21st century. So essentially, if you didn't understand from that, and you heard all the business speak, it's an e-commerce. It does not have a brick and mortar. It's basically a luxury fashion brand. Now they have Revolve and Forward. Those are the two big ones. They have kind of their sort of micro brands on their platform, but those are brands and things that they're establishing. But really, Revolve and Forward, those are the two things that you need to pay attention to. Those are the two big sort of platforms that they use to sell their brands. Now, the way that they do so is through influencer marketing as well as just social media in general, because a lot of sort of their target audience and who they're trying to sell to is sort of that person who's trying to get that unique look, that sort of established look that looks really good, it looks really luxurious, is kind of how they want to put it. And really, if you see people at like events like Coachella and other festivals like that, a lot of what people wear is Revolve clothing, or it's from a brand on Revolve's website. Now, one of the reasons that I really liked Revolve and why I really got interested in the business from the beginning, it's a heavy female demographic, and really what they're focusing on is the luxury sort of attire that you'd wear to like a Coachella or other big events, or influencer events and things like that. And that's kind of what their marketing is geared towards, is that target audience that's trying to get like a unique look, something that's more high-end or premier, or however you want to say it. That's kind of their goal. So that's one of the things I really like about the brand. And one of the best things is their management team. Their management team's been doing this forever. They own, I think it's like half of the business or close to half of the business in terms of their outstanding shares. And one of the best things was that I liked seeing was at the beginning of 2020, the management, both the CEOs, actually did not take any salary. They cut their salary completely, and they immediately took out a revolving line of credit and made sure that everything was covered. So they immediately took action as soon as everything started getting shut down. They pivoted and navigated through this whole entire COVID situation very, very well, which honestly, when you are sort of a young business and your whole entire marketing is based on events, and all of a sudden events get shut down, it's awesome to see that they were able to navigate all this. And I really enjoyed just kind of watching the business grow, because again, I did get into it towards the end of 2020, rode it through 2021, and we'll get through that in a little bit. Now, Revolve breaks themselves down into two, like I had mentioned earlier. They got Revolve and they have Forward. So I'm gonna pop up on the screen, you're gonna see the 10K results, and then you're gonna see the 10Q results. So I'm just gonna talk through the 10K results and the 10Q results real quick. So net sales, they had 745 million in terms of Revolve, and then 146 million in terms of Forward. You can see the growth year to year to year, and obviously a big portion of that is stimulus and COVID check related, and I'll talk on that later. They're trying to grow international as well, so you can see the United States and versus the rest of the world. So you got pretty much 75% of it's coming from the United States, and the international piece has been growing a lot more. And then they also break down where those sales came from in terms of their business. So you have fashion apparel is really their big piece of it, the dresses, handbags, and then beauty. beauty's been growing a lot, and they've been really trying to implement that. And obviously dresses are coming back, as you can see from 2020, 2021, due to events coming back. And then just looking at the 10Q real quick, you got $237 million in the first quarter of 2022 from Revolve, and then you got $45 million from Forward. And then obviously Q2 is really their big time to shine. It's really like the first half of the year, sort of their really good profits and really good revenue because of all the events and things happening. And then down below, you can see the breakdown of where their net sales came from. So obviously fashion apparel came down just a tiny bit because dresses really took a lot of that revenue. And fashion apparel just was kind of a catch-all for everything, and that's kind of what they focused on more, is that and beauty, I believe. That 2020 had a, 2020 and 2021 had like a big sort of jump in because people were stuck at home. So heading into the financials, revenue-wise, in terms of the last trailing 12 months, they're almost at $1 billion. They're really, really, really close to $1 billion. And honestly, I wouldn't be shocked if we don't hit it this year, but I don't know. It's all going to depend on how everything in terms of the economy plays out. Now, margin-wise, they have a 54% gross margin along with a 10% net margin. And then PE, they're trading at around a 20 right now. I think the forward PE is like 17, 18, something like that. And then their enterprise value to EBITDA is 16. Their current cash is $270 million, and they have zero debt on the balance sheet. So you love to see when companies are able to have that much cash on the balance sheet. And I believe I actually did the math, and you'll see it later on the screenshot from the DCF, but I think the cash per share is like $3, $4, somewhere around there. So it's trading at $27, $28 as of today. So really, you're getting into this for a little bit less than 27, 28 if really all that cash is going towards that. But it's something that I wanted to mention. Now, why did I sell? I have the Substack article linked in there as well, in terms of why I sold. But why did I sell really quickly? So I got in at around the $18 mark. I think the cost basis by the time I had bought the shares that I had was $18. And that was Q4 2020, so November 2020, I believe. And then it went from $18 to $87 following the next year. Now, the PE was like 60 or 70, and 300% on initial position is, it's great that I got it, obviously, and I wanted to lock in the profits and all that, but I didn't believe the business was valued that much higher. And obviously you can see today it's fallen quite a substantial amount. So I just sold off, took profits, booked some of that by the end of for the end of the year, because there was a lot of talk about, people tax harvesting and all those things coming. So I wish I would have sold some of my other positions sooner, that I had already sold off as of now, and I'll talk through those maybe later on in a different video. But there were some other positions that I wish I would have just sold to not have to pay any taxes on the gains of this company. But we want to get back into this business. I really like it. I really think that there's a longevity to it, but I got to get in at a price that I feel is reasonable, and that's what we're going to be going on through at the end of the video. Now, we're going to be going through some of the strengths and what I think are the strengths, at least. The big one to me is really the close relationship with influencers. It's become really apparent how big it is, and how much better of a turnover really that you have in terms of, you give an influencer a product with a, click on this link, my affiliate link, and it really generates a lot of leads and a lot of sales for companies. And when you have like a micro or nano influencer that's really, really small but has a really solid following of people that actually listen to them, and suddenly you send them, a dress, a couple of different items of clothing, and they try it on and review it, suddenly people are interested in your brand. And I mean, I can't speak enough on how important it is to have close relationships with these influencers. So that's why Revolve's been involved in a lot of different events over the last year, in terms of they had their own basic Coachella festival kind of party, and a ton of influencers went. And if you've seen any of the backlash that they got, there's a lot of different stories out there in terms of what happened, and it sounded like a lot of micro or nano influencers weren't too happy with how they were treated. But it sounded to me, from what I've heard, that a lot of people came late when they had a set time that they're supposed to come, and so they had to wait now. So I don't know the truth of that, just look into it. But that's one of the events that did really well, in terms of they had a ton of different celebrities there, a ton of different influencers there, and it got a lot of good marketing done and put pictures and things like that. So it's really interesting to see. So the next thing that I want to walk through is actually going to be the operating metrics and things like KPIs that they follow themselves internally and things that they share in their investor presentations every earnings. So one of the big things to me from the 10K was actually the existing customers typically place more orders annually than new customers and at higher average order values, resulting in existing customers representing approximately 76% of orders and approximately 77% of net sales in 2021, up from 74% of orders and 76% of net sales in 2020, and 57% of orders and 58% of net sales in 2014. So it's interesting for me to see, like, if they can just build that loyalty, how many people are willing to just spend on their platform. So going through a couple KPIs that are really important. The big thing to me is their active customers and orders placed. So their active customers, they're currently sitting at, what is this, 2 million active customers for the trailing 12 months, along with total orders placed. Obviously, you're going to see a huge boom in Q1 of 2022 with all the events coming back. Not surprising there. And then the average order value, it seems to be bouncing between like 230 to 250 or 260. I was looking at like a couple past years beyond 19, and it seems like, 230 to 260 seems to be where it bounces between. So 288 is great to see, but I could imagine, going towards the end of the year, it might come down a little bit just as people aren't buying dresses or anything like that for events. The increased productivity from active customers was another one I thought was really, really, really interesting. So you can see the average number of orders placed per active customer over the last 12 months. So you can see very, very slowly it's gone up and up and up and up and up. And obviously they're marking out where, COVID kind of started and what really led all of that. And unsurprisingly, as stimulus checks and things came out, these are obviously going to be higher and higher because people are paying more. But really, I think a big piece of it is the fact that these people keep coming back and paying. So clearly there's something there that makes people want to come back, and that's something that you really like to see in a business, where the consumers continue to keep coming back. So the last thing I wanted to show you as far as operating metrics go, so their gross margin over the last 3 years, clearly bouncing between 50 and 55%. Their adjusted EBITDA has almost doubled since 2019. They seem to like to compare to 2019. This is for the full year 2021. And then their free cash flow obviously is pretty much double from 2019. Their active customers have gone up, 400,000 people. And then their total orders placed have gone up almost 2 million. So that's really awesome to see. But again, there's a lot of stimulus checks and things that had gone on. So it's unsurprising that when you have a ton of, spendable money, that orders and average value and everything that you're going to spend money on is going up. So the last thing that I wanted to touch on really as far as their strengths go is their customer acquisition cost. Now this is going to come from their S1 from a few years back. So it's not going to be anything really current, but I thought it was really interesting because it kind of gives us an insight into what the management saw when they were sort of seeing like, okay, we acquire a customer, how much can we get out of them in terms of what value can they bring after, initially acquiring them. So if you look, the initial acquisition cost is about $30. And again, this is from a few years back when these numbers were kind of created. So it might be a lot different now, but I would imagine it's probably in the same ballpark. But anyways, so you have a negative $30 acquisition cost per customer. And then from there, over the next few years, you have basically all the lifetime value of this customer. And it would be interesting to see if they updated it now, what this actually looks like. But it just goes to show you that, you acquire a customer, get them in the door. And again, that goes back to the whole, 70, 75% of the people keep reordering and they're ordering at higher average values. So you're going to continue to build that loyalty and have people keep coming back. And especially with the way that they manage their inventory and keep coming with new products, it's really interesting to see. So moving on to the weaknesses, there's just some things I wanted to touch on. And again, I'm not going to dive in like crazy deep to some of these because I think some of it's kind of intuitive. But the inventory management seems to be kind of the big hot topic right now. There's a lot of retailers that are not doing well inventory management wise, and they're not keeping control of their inventory. And because everything in this business is tech and data driven, I think that can be an issue if we're not paying attention or if their management's not managing this correctly. So that's something I want you to watch when you're looking at their financial statements. Look at the inventory and see if there's any write-downs that they're including in some of these financial statements. The second thing I wanted to mention was that their third-party suppliers are in China, and really they're not based in the US for the most part. I think it was China, and then there were some other Asian countries that they had not completely specifically mentioned, but they just said it's mostly Eastern Asia that they're working with, along with China. So, I mean, the thing is that with supplier costs and things going up, and suppliers want to pass on costs and things to companies like Revolve and other companies that are getting products from China. It's important to understand the shipping costs, inflation in other countries, and things that can impact the costs going in, the input costs going into Revolve's products. So when you're looking at and listening to the management speak on their business and how their supply chain's doing, just know that a lot of their products do come from China, so these supply chain issues could possibly hit. I haven't seen them say anything too crazy about clothing and retailers getting hit, but it is something that I did want to mention because I think that it is important that you understand, like, they're not building these in, or they're not making these and manufacturing these in the United States. A lot of it's coming from other countries. So the last thing that I wanted to mention was the slowdown that you may see or may not see. It really depends. But as you can see, people are scared of a recession. People are going to stop probably spending as much. And a lot of the last few years of Revolve's, success has been driven primarily by stimulus checks and, just people getting paid more, stimulus checks, and just sort of, a growth in credit in general. So if you look at like a luxury brand like Revolve, make sure you look at it in the context of like, where are we at in the economic cycle? Because if we're at the top of the cycle right now, obviously a company like Revolve is going to do well, but understand what the conservative estimate may be. And, if it dropped, the company suddenly lost some earnings, what would that actually do to the company's valuation? So make sure you're paying attention to all this. Those are just some weaknesses I wanted to touch on. Obviously, there's nothing crazy in depth or anything like that, but just when you look at the company and you do your own research, make sure to pay attention to some of those aspects, because I think that, to me at least, that's what I'm listening for in the earnings call. That's what I'm reading about when I'm looking through the transcript or through the filings. So the next thing that I want to go to is actually the DCF for this. And again, the DCF isn't like a perfect math. It has a lot of assumptions and estimations built in. So if you look at this and you're like, hey, this is missing, blah, 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 I'm just trying to ballpark. I'm not trying to get like an exact amount. And obviously, when I talk about where I sold puts, I had to mention an exact amount and what I'm okay with paying. But I use this as sort of a gauge and not as like it needs to be under exactly this amount or else I'm not paying it. That's not how I view buying businesses, and that's how you shouldn't view buying businesses either. Because if you're waiting till $15 and it hits 15.01, you're like, I want that last cent, and it keeps going up from there, you're going to regret not buying. So with that being said, let's hop right into the DCF. So obviously, I filled out some of the information. You get your outstanding shares, current revenue, TTM, you got your free cash flow, TTM, and then you got your net income, TTM, and just some of the margins and things that are right next to it. So based on that, I wanted to throw in a couple of different assumptions. So you got your low, mid, high case. 5% on the low end, 10% on the high end, and this is for the next 7 years. Profit margin of 7% to 9%. They hit a net income margin of 10% as of the TTM, so I figured using the 10% as the high end might be a lot better. And again, free cash flow margin, same sort of thing, so 6 to 8% depending on what you're looking at. And then a terminal PE, so this is again, a year 7, what is this going to be worth? At year 7, I put 17 to 23, and then I have a 12.5% discount rate. Now, with all those inputs, I get a fair value of around $18, $19. And, with the margin of safety, let's say 20%, it's around $15. So all that being said, you can see the worst case and best case here. I really do think that $15 to $20 is probably a better entry price for myself and what I'm more comfortable with in terms of where this business is versus where the economy is. I really tried not to get into cyclicals right now because I've just been reading and trying to understand, where some of these may be in the cycle, because to me, I'm looking at like what's happening outside and like, okay, like, will this business do well? Will they not do well? And I think Revolve will do well, But I want to make sure that if I'm investing, I'm not investing on the high end case. I'm investing either in the low to mid case. Somewhere in between there is probably where I'd be happy. So with that being said, so I did sell puts, and I want to just mention like why I sold them instead of just buying the shares outright and things like that. So I sold puts a couple weeks ago, and then obviously this last week I did as well. And really what my goal was to be able to get into the position and actually put the shares. I would like to get put the shares at 15, because that means if the company's price dropped to 15, that means I got the premium plus I got the actual shares. And ultimately I would love to have the shares. So with that being said, so I'm ballparking the intrinsic value. It's got to be 14 to 18 in my head. At least that's what I'm comfortable with. And so what I decided to do was sell. I put for $15 at the strike price, $15 at August 19th, 2022. And then I think it's January 2023. I'll have to look at the date in a minute. But really what we're going to look at is why and kind of the rationale, what I'm trying to do with this. So you can see here that the strike price is $15 again for both. You can see the dates along with that, and then you can see what I received in terms of my premium for each one. So I took the screenshot a couple days ago, so don't be too shocked if you just saw the screenshot and you saw it from the portfolio review that I did. So what happens is, though, is I'm selling this at $15, meaning that I get $154 in total in terms of premium. So I got $154, and for that I have to just wait and ride this out. So what happens is I have $154 given to me and for selling the put, and if my the stock price at the time of the put expiring isn't below the $15, I don't get put the shares. So I keep the premium, but I have to give back the contract. Really, it just expires and goes to zero. So I would like to be put the shares. I would like to, if it hits like $14, that'd be perfect. But I don't know if it will. I can't predict the future. If I could, I would be doing a lot more than just selling puts. But I want to enter the position with puts, so that way my cost basis is already starting in a tiny bit lower, along with the fact that this company seems to be pretty volatile, so you're going to get some good premium on this. I think I was like 8% premium versus the stock price on that 2023 option. I think it was 2%-ish on the August option. So the thing is, though, is it locks up $3,000 of my own cash that I have. I have around 9 to 10K in total of cash in my portfolio. So it locks up a third of my cash, and there's a lot of opportunity costs that could come from that if something were to happen and I didn't have enough cash to cover something else. But I keep adding cash from my own income into my portfolio, so I'm comfortable if I needed to buy this, or if I have to wait till 2023 for part of the $3,000 to be able to be unlocked, essentially. So ultimately, I want to be put the shares at $15. If it goes below $15, cool. I'll keep adding, if it were to drop significantly more, but ultimately I want to get put the shares so I can start selling calls on the position and really, set the exit price that I want to go at and earn premiums the whole way through. So that's kind of my goal with this. Again, this isn't like for everyone, and I don't think that if you don't understand the risks and everything involved, you shouldn't really be playing with options at all. But I like selling puts. I like selling calls. I'm not too big of a fan of buying long-term puts or long-term calls unless I know what I'm, researching. But I haven't found anything where I'm comfortable enough to buy those. But I do think long-term this business is going to do really well. I just want to get in at a certain price, and that's why I can sell puts. I get premium for waiting, and if I don't get put the shares, then I just keep the premium and it gets invested into something else, or I just buy another or sell another put on this, which if my August expires, I'll probably sell another 2023 put if I can, depending on the premium. So I'm looking $15 is my entry price. There are some 1750s that I saw that looked pretty good, but I ultimately just going to take the safer road and go for $15. But with that being said, let me know if you have any questions down below. I want to do a video on puts and calls and things like that, but I need to read up and kind of write out a video better so I can explain it to you and understand it better myself. But I understand selling calls and selling puts, so maybe I'll make a video just specifically about that. But if you want to learn more about kind of that wheel strategy, I think it's called, look up Matt Peterson. He did an interview with Investor Tom and Hamish Hodder, and he also, New Money had a video on it as well. It's really interesting to see from an investor standpoint how you can generate money on the downside and the upside and just the whole thing. It's basically like giving yourself a dividend just for holding the shares. And if you sell a call, like, you're going to exit anyways. You just earn some money on the way. So it's really interesting. You can learn about it. I'm not going to dive too deep into it here, but let me know if you want to learn more about it in terms of investing, value investing, how that can really help boost some of your returns in terms of the year in, year out, what it can actually do. But I'm looking to get in this business. I really, really like the business. I like the business model, I like the management, I like everything about it. I just need to get in a certain valuation. But let me know what you think down below. If you think this is a good business, bad business, or if you think there's something else that's complementary that might be at a fair valuation. Let me know though down below. Have a great day. Happy investing. Peace.